What up, fam? So today will be day two of our swing trading course. So before we start, I would actually like to talk about some basic understanding of the market for new traders. So when we talk about the market, right, we're actually referring to the S&P 500. And what is the S&P 500? It's essentially a basket of top 500 stocks in the world. So you heard about the term index, ETF. All these are actually referring to the same thing. They're referring to a basket of stocks. So just imagine there's a basket and you throw all 500 stocks in it. So that's what we call the S&P 500. But they are the top 500 stocks in the world. So these ETF are managed by different fund houses. I am sure you guys heard of SPX, SPY, VOO, SPLG. All these are actually the same thing. And you can just imagine, example, every single fund houses, just like every single banks, like Maybank, Public Bank, Hong Leong Bank, and these banks they offer their own fund. It's called Maybank Fund or whatever fund. All these fund they track at the S&P 500. So what it means is that if the S&P 500 goes up, these funds will go up as well. And when it goes down, they will go down as well. So they just want to charge you the management fee, is how they make their money. So why are we talking about S&P 500? Because the S&P 500 has an annualized return of 10% for the past 100 years. So what it means is that if you put your money into S&P 500 for every single year, you'll get at least a 10% return. And we know that, and it's important to us because as traders, if you're risking our own money, we want the return to be much higher. Because if you're not making, 2 or 3 times more than what the S&P is, you would rather just throw the money into S&P and just go to sleep, and then you make 10% a year. So, with that being said, we want to talk about S&P 500 because we need you to understand that the money in the market is not infinite. That's why there's a term we call sector rotation. What do I mean by that is that, for example, right now the hottest topic has been about AI. A lot of people are talking about AI. All the money is pouring into AI. But what happens in this year, April, when Trump announces the tariff? There's a lot of fear in the market. So all the money from AI, all of them rotate into defensive stocks, such as the medical stocks, such as consumer discretionary. For example, like Walmart, all these are considered consumer discretionary stocks. So the money will flow from one sector to another sector, depends on the sentiment of the market. So our job is to follow the big institution. Wherever they go, we follow. And the reason for that is because we always want to go where the money is. And with that being said, how do we actually know where the money is pouring? We want to go where the money is because we want a lot of money to pump the stocks up, right? So that's where we talk about relative strength. And what is relative strength? A high relative strength stock will be more bullish than the market, and a low relative strength stock will be less bullish than the market. So what that means is that, let me give you a very simple illustration, right? So let's say we have two stocks, stock A and stock B, and both of them are started out at $100 in January, and one stock by the end of December went up to $180, and the other stock only went up to $120. So even though both stocks went up from the beginning of the year to the end of the year, one went up by 80% and another only went up by 20%. And as traders, we want to go to the 80% stock because there's a lot of volatility and a lot of cash pouring into this stock. That's why there's 80% increase. And that's where we'll make our money because we are swing traders, we are momentum traders. We want to follow stocks that are super high in momentum. That's why we want to go for stock A. But the question now comes back to, how do we know which stock will, have the potential to go and explode out? It's very simple. We need to read the RS line. We need to look at RS line. So RS line stands for relative strength line. And how do we read the relative strength line? Is very simple. It's the same thing with how we read the trend in part one. So same thing. You need to read by having a you need to read by having a higher low. So we want to have a higher high and a higher low for uptrend, and the same thing, we want to have a lower high and lower low for downtrend. So it's the same thing for RS line as well. And now what I want you guys to do is that I'm going to go to TradingView. Go to TradingView, open the indicator section, and type in Trader Lion's relative strength line, and only use this on the daily time frame. So let's just pop right in. So this is my TradingView. as you guys can see. I'll just go to the indicator section and I'll type in Trader Lions relative strength here. I'll just click it. So once I click it, it comes out this blue and pink color area thing. So remember that I'm on my daily time frame, and I'll explain to you what is this exactly. So if the it shows you blue area, it means that it's stronger than the market. And if it shows you pink area, it means that it's weaker than the market. So when we want to buy a stock, we want it to be in the blue area. And if we want to short a stock, we want it to be in the pink area. So it's very straightforward and very simple. So as you can see, if the relative strength is blue and minimal pink, it means it's strong. It has a very strong relative strength. If the RS line is blue with minimal pink, it means the relative strength is medium. And if the relative strength is blue and pink, it means it's weak because it's choppy. It's not a good relative strength. So let me just give you an example. So this is the Nike example. As you guys can see on the top left here is Nike. So Nike in the beginning of January this year, is the stock price actually started from this area. So as you can see, the relative strength has been choppy. So it's been pink, blue, pink, blue. So we know that the stock is not going anywhere because it's reflected here as well. If you buy the stock here, it's not pumping all the way up, but it's not dropping as well. It's just sideways action, choppy. So for stocks like this, right, like this kind of relative strength, it's not ideal for us to enter because we don't want something like this. We want very clear uptrend or downtrend, even for the relative strength, the RS line. So if you go to the next example, as you can see, it's a much clearer relative strength. So let's say if we want to short the stock, let's say we want to short open right here, example, because the relative strength for the past many days has been forming lower low, lower high, lower low, lower high, lower low, lower high. So at this point, we don't know what is happening right here. We only know what is happening before. So let's say we found an entry here. We assess the relative strength, and we think that it's very weak. It's much weaker than the market. So let's say you take an entry here and you short the stock. It went all the way down here. So the relative strength gives us a higher probability of where the stock is actually going to go. So let's say at this point onwards, you can see there's a lot of blue area, and there's been forming a higher high, higher low, higher high, higher low. So at this kind of area, we don't look for shorts, we only look for longs. So what I'm saying is that because the open has been way stronger than the market in this area, so we are more long biased than short starting from here onwards. Okay, so I think it's very, very clear. So this is another example of Starbucks. As you can see, today is the 9th of October. I took Starbucks short around this area, live. I call it out live on my Instagram. So you can see that the relative strength for Starbucks for the past 10 to 20 days around this area has been pink, and it's been forming lower low, lower highs, lower low, lower highs, lower low. So what it means that Starbucks is very weak and it's much weaker than the market. So for stocks like this, we only want to look for shorts. And I took the stock short at this area. Right now I'm in profits, but I haven't closed out. I haven't hit my take profit, but we'll see. We'll see. But this is a valid setup for short because the pink area is very clear. It's very apparent that it's in the downtrend. It's very apparent that it's much weaker than the market. All right. So the next stock we want to talk about is CRM, Salesforce. So I took the stock short around this area, I believe, and because I've seen the previous 10 to 20 days around this area is fairly weak. It's much weaker than the market. It's been forming lower low, lower highs, lower low, lower highs. It's all in pink color, so we know that it's much weaker than the market. But eventually, I got stopped up. It means that I lost this trade. I hit my stop loss. So this is an example to tell you that relative strength doesn't necessarily means that you definitely win. It just gives you a higher probability that the trade will go in your favor. So it's very important to remember that relative strength doesn't mean that you will win definitely. It just gives you a better chance of winning. With that being said, relative strength is very, very simple. You can literally just know whether a stock is weak or strong just by looking at the color. So your job as a trader is to know whether you have a very strong or very weak relative strength. So the trade will play out more in your favor. So in the next topic, I'm going to talk about more on volume, and then I'm going to touch on entry and exits as well. So I'll see you guys in the next one.